For Emily Chang, this is Bloomberg Technology. Coming up in the next hour, tech tumbles, FANG stocks hit their lowest levels since late July. Is tech losing its shine? Plus, Microsoft CEO Satya Nadella joins the chorus for federal privacy regulation just days after Google became the latest to reveal a security flaw. Our exclusive interview is coming up. And cryptocurrencies have suffered amid the global equity rout. Now Coinbase is seeing a big drop in user volume. We'll look at what's ahead. But first to our top story. US stocks have seen their longest losing streak of Donald Trump's presidency. On Wednesday, we saw the FANG stocks hit their lowest levels since late July, falling as much as 4.1%. Investors, well, they're searching for answers. And the simplest one may be that tech as a whole just isn't that special anymore. Here to explain is Bloomberg's Sarah Ponczak. And this is as we look ahead to earnings in particular.
Right. So if you think about earnings, this season, as we head in, tech as a sector is expected to have 90% earnings growth. Now, yes, 90% earnings growth is still great. I don't want to take anything away from that, but the S&P as a whole is expected to see earnings growth above 20%. So you can make the argument that maybe for once, this is the first time this has happened since 2014, tech just doesn't have as much luster heading into earnings season.
Yeah, because everyone can suddenly bring out about 20% growth, right?
Right, everyone across the board. It's not just tech, they're not special anymore.
Are they really growth? I'm looking actually at also, this is a sort of a question of whether the mighty fall. I'm looking at how much the beaten up stocks are actually those that have been the most in favor. If you type in GTV, you can check it out on the Bloomberg terminal. Past performance basically nowadays is no guarantee for future results. How much of it is it the best performers suddenly become the worst performers, Sarah?
That is a lot of what we are seeing. If you look at Momentum, MTUM, that's the ETF that does track a version of Momentum, it had its worst day since the inception of the ETF yesterday.
Wow.
And that ETF does track the past winners over the past year. So you are seeing the big winners get sold. And if you think about this bull market, 4 of the top 5 names that really fueled the gains were Microsoft, Apple, Amazon, and Google parent Alphabet. Well, just as it happens, yesterday, they were the 4 biggest laggards as well. So you just see that direct opposite reaction there.
And such an erosion of market capitalization. Let's get a perspective from the investor base now. Jones Trading Chief Market Strategist Michael O'Rourke is joining us. And Michael, is it now the time to actually start buying? Have we seen an erosion enough of the overall valuations that these companies start to look at a better time to get in?
Now, I think this is only the beginning of the selling in the technology sector. It seems to me that the China hacking story that Bloomberg Businessweek broke last Thursday is where the sell-off in technology started, and obviously has gained momentum in the past throughout this week, as there was another report earlier this week that there was another instance of this espionage occurring in the technology supply chain.
Interestingly, I was speaking to none other than the CEO of Microsoft, Satya Nadella, yesterday, who was discussing, Michael, how he feels that playing to that Business Week story that's starting to see hardware hacks as the key threat here. Take a listen.
The next big security attack is not going to come from your conventional email being compromised or a computer endpoint. It's going to come from the HVAC system. So 9 billion microcontrollers are shipped in the world, and we really now have, with Azure Sphere, a silicon design as well as a security service and a secure operating system that help us ensure that all microcontrollers going forward can be secured.
Michael, Amazon, Apple have been tainted by this story. Microsoft hasn't been, and they say, look, they see no vulnerabilities whatsoever. Instead, they're just shining a light on them. How much do you think these sorts of concerns about hardware attacks is going to double down on the trade tensions between the US and China?
I think this is a major event. A month ago, or a month or so ago, there was a report that China might start toying with the technology supply chain as a negotiating tactic in this trade war. Now, at that point, they would have risked alienating the U.S. multinationals dealing in China. But again, they're trying to wage this trade war in an effective way. Now, when you have this hacking story, break and suddenly start gaining momentum, now you have to start thinking the whole entire technology supply chain has to be rethought. And when you think about globalization and China entering the WTO in 2001, U.S. multinational, the U.S. economy, we traded GDP growth, wages, jobs, in exchange for corporate profits and lower consumer prices as companies offshored. And that's a big shift here. And does that all have to be undone? It's way too early to tell, but it's a very big risk to corporate profits.
Sarah, you're looking not only at the tech sector, but many sectors. How much are we already, in the pre-announcements we're hearing from certain companies, hearing that China and the trade tariffs are a problem?
We are hearing some. So LVMH, we heard from earlier this week, them saying that China is cracking down on border policies, and they're really checking people who come into the country. So that ultimately sent fashion names like Tiffany, like the owner of Louis Vuitton, lower on the day. But we're also hearing that it's kind of leading to higher input costs as well. And we're seeing this start to crimp profit margins, and companies just can't keep up with it. So Fastenal, when they reported earnings, we heard it there as well. So we'll start hearing it even more when the banks kick off earnings tomorrow.
Let's talk about earnings with you, Michael. How are you setting yourself up as we go into the earnings season? How is technology likely to outperform, underperform, or just about match?
Well, I think this whole trade war story is much bigger. Obviously, the first half of the year, earnings and the tax cut were a big part of it. Obviously, the repatriation of the offshore cash that a lot of technology corporations have, and that's become old news at this point. So going forward here, everyone's going to be focused on how are these companies going to manage these tariffs, the supply chain issues, and we have an environment where we've gotten that one-time boost from the corporate tax cut. What's the outlook going forward? And as Sarah noted, we've already seen some weakness in other sectors, and that is going to be a source of concern for investors.
Why do you think then, on a day like today, technology actually outperforms, Michael?
Well, I think what you're seeing today, it's a perfect example. Technology and communications, which is obviously a lot of technology companies, they've been downside leaders in the past week, and they were the first group to get sold at the heart of this issue. Then the past few days, you've seen materials pre-announcements in the chemical sector. Their clients are industrials, so you've seen selling in those two groups. And now what you've seen, well, you actually saw a few days of strength in utilities and REITs because they don't really source or sell into China, and they were thought as a bit of a safe haven despite the rising rate environment. And now you're seeing people come back into those oversold groups, and they're selling other winners or other groups that are still up, whether it's financials or healthcare. You're just seeing a downward rotation in the stock market, which again, it shows investors are a little jittery, and after a huge bull market, they're looking to take some profits off the table.
Great perspective, both from Michael O'Rourke of Jones Trading and Bloomberg's Sarah Ponczak. We thank you both for joining us. Now, the group behind matchmaking app Bumble is weighing an initial public offering in the US as part of its plan to become the world's biggest dating business. What a time to be thinking about it. This is all according to founder Andrei Andreev. Now, Andreev hopes that the initial public offering will help their firm overtake Tinder owner Match Group as the world's most valuable dating company. Coming up, Satya Nadella has joined the tech chorus for a federal privacy law. My exclusive interview with the Microsoft CEO is next. And if you like Bloomberg News, check us out on the radio, why don't you? You can listen on the Bloomberg app, Bloomberg.com, and in the US on Sirius XM. This is Bloomberg. Microsoft CEO Satya Nadella has joined the call for a national privacy law, just days after Google revealed a security flaw with its Google Plus social network. Other tech firms have said they also would rather have one standard law rather than state by state. I sat down for an exclusive interview with Nadella and started with the tech giant's pursuit of the Pentagon cloud computing contract, said to be worth more than $10 billion.
At Microsoft, for all of our existence, we've always had Department of Defense as a customer, and many other federal agencies. In fact, tomorrow we have our government summit, where we're going to talk about everything that we're doing, from the Department of Labor to the Department of Agriculture to FEMA, and the Veterans Affairs and so on. So because I think we are broadly investing in what is our competitive differentiation of bringing cloud technology and our edge technology, which I think is more and more relevant to more and more of our taxpayer dollars being spent well, so that we can get more efficiencies out of the IT infrastructure that needs to power all of these institutions. So we are very, what should I say, focused on making sure we bring the best technology and compete in any of these contracts that get put out for competitive bid.
Does it ever, with the focus on security, which must be in front of mind when you're serving anything federally, whether you're serving the government, how much do you think there is a focus at the moment, enough of a focus on security, and then you as a company have managed to find midterm election potential attacks coming from the likes of Russia? How are you looking at cybersecurity? How are you ensuring that you're at the cutting edge? And is it tackleable at the moment?
I mean, I think that some of the best work that we're doing when it comes to even AI is to really help with the cybersecurity posture. I mean, in fact, I always say this, which is the most important thing that we as a company can do and have as an asset is our cybersecurity or operational security posture. We have something like 6.5 trillion security events that we see, 450 billion logins a month across all of our properties, 1.2 billion devices we scan, maybe a couple of billion malware we inspect. So all that has to be converted into operational security and operational security health for all our customers. I mean, a good example of that is what happened with Strontium. Basically, we saw that attacker group was attacking some of the folks in the Senate and some of the affiliated groups with the Republican Party and with phishing attacks. And so we realized that we needed to get hold of those domains. And this is where it's not just about the technology, but it's even the policy work we did and with working with the legal infrastructure to be able to transfer those domains and then sinkhole the traffic. Another example is, in fact, nowadays cyber criminals are being very precise, what should I say, targeting small businesses. And that's a big issue because consumers and small businesses suffer the most when it comes to cyber attacks. And this was a group called EarthSniff, or an attack called EarthSniff, which was attacking small businesses in Johnson City, Tennessee. And we were able to detect this and get rid of it on first sight, which is really one of the big challenges of AI. And so we're doing work there as well as in IoT, because the next big security attack is not going to come from your conventional email being compromised or a computer endpoint. It's going to come from the HVAC system. So 9 billion microcontrollers are shipped in the world, and we really now have with Azure Sphere a silicon design as well as a security service and a secure operating system that help us ensure that all microcontrollers going forward can be secured.
Talking there about software issues and hardware issues and safety. We've of course seen a Bloomberg Businessweek piece which has looked about the concerns of supply chain strength. Is this something that you think is fully secure when you look at Microsoft and can be going forward when we have such strength of attacks, as you say, that you keep picking up on?
Yeah, I mean, look, when it comes to operational security, including, I'll call it silicon supply chain or software supply chain, it's all about every day being in the gym and practicing. And in our case, in this particular incident, we're very confident that we have no exposure, but we've got a lot of people dedicated to it, a lot of technology dedicated to it, a lot of rigor and process dedicated to ensuring our supply chains, as I said, both silicon and software, to be secure.
Wrapped up with the cybersecurity conversation is that of privacy. Do you think the legislative agenda is where it should be, regulation is where it needs to be when it comes to privacy of individuals' data and when it comes to the security of company data?
I mean, it's a great set of questions, but we're already living in a world where, for example, I think the secular movement around individual data is that you should think of privacy as a human right, and GDPR out of Europe, in some sense, legislates that. And so we've done a lot of work implementing that in our products, and we have taken some of the rights from GDPR and made it available globally. And so I think that this is something that the United States will look at. I know California has looked at it. We hope that there's more of a national privacy law, because I think we don't want increased transaction costs that in fact are going to harm more of the small businesses, not large companies like Microsoft. But if you really want a level playing field, I think having a legislative framework that reduces transactional costs and even causes new entrepreneurs to be able to adopt it as a very important thing. The other one I would say is Cloud Act. I think the United States, I'm very pleased to see us, because after all we had to go to the Supreme Court and fight our own government on this case multiple times, but we did, in a bipartisan way, work with the legislative bodies to get Cloud Act passed. And it's fantastic, because I think that really creates a new equilibrium of how nations can balance their need for privacy on one end and national security on the other end. And this is something that I'm hoping that will now be bilateral deals between the United Kingdom and the United States and other governments, which I think is very needed.
Satya, you helm a fascinating company because it is more than 40 years old, as you were on stage talking about. It's been through its education process. It's looked at regulators over the years. It's evolved. It's made sure that it's now still one of the most valuable companies in the world, cutting on $1 trillion. How do you look at some of the other big technology giants that are grown in the US and see them having to evolve and catch up in some ways to some of the charges and arguments and indeed resolutions that you've had to find in your past? What experiences can you give to them? Do you think they're all dealing with it in the right way as they evolve?
I can only speak for our own experience and what we are trying to do. And I think we as an all-up tech industry, I don't say this as sort of some kind of a terms of competition between us. I think all up, when I look back in our own history between, say, 1975 to now, technology and its importance in our societies and in our economies has gone through a sea change. The tech industry itself is just 5% of our GDP, and yet I think its influence on the rest of the 95% is far greater than it ever has been in our history. And so therefore I think all of us, including Microsoft, and starting with us, is to be comfortable knowing that we will be held to a different standard. And that's what I think about as Microsoft, and how everything from what's our operational security posture to what is our ethics, how are we going to, in some sense, even go and ask for regulation, where I think it'll create more of a rule of law and a framework for us to make progress, especially in liberal democracies. So I think that these are all the places where there needs to be a level of maturity way beyond, I think, day-to-day competition.
Microsoft CEO Satya Nadella there. Now up next, Satya Nadella weighs in on the trade concerns gripping world economies. More from my exclusive chat with the Microsoft CEO just ahead. And Bloomberg Technology is, of course, live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg. Now, as the trade conflict between the US and China deepens, Microsoft's CEO has weighed in on, how the tariff war might impact his business. Here's more from my exclusive conversation with Satya Nadella.
Being an American company, in fact, I always say that we are a multinational company that is an American company. So we are fundamentally dependent on and also proud of the American values and the trust in American institutions and values that the world has. And so clearly that has served us well. And quite frankly, even today, I think they serve us very well. Because I think our form of government, our form of democracy, with all of the debate we have, our ability to be able to set an example for what is a place where a lot of people of diverse backgrounds can come together, have a debate, and move and make progress, I think is what makes America unique. And us being born in that culture is what gives us credibility. And of course, we can't take any of this for granted, either as a nation or as a company, and we have to earn it every day. And somebody described trust is this formula, which is it's about having values that are consistently applied every day or over time, and that's what engenders trust.
Are the trade tensions affecting your business, though, do you think?
In trade tensions, here, I think we're going through this phase where everybody has recognized that, let's call it the phase of globalization, has not created equitable growth in all parts of the world or in any country to all parts of the society. So every country is relooking at what are their relations around trade that help them thrive, because that's key. I mean, I think every country will put their country's interests first and look at what makes most sense. And what is it that's our responsibility as a multinational company is to sort of say, what are we contributing in each country? How are we making small businesses more productive, or public sector more efficient, or multinationals in that community country more competitive? If we do that, we're good. If we don't, we have a challenge, because I think long-term stability for us comes from our ability to create more surplus and more opportunity outside of what we do.
Talking about trust and talking about the way in which you're helping serve businesses, you've made a big push into, of course, artificial intelligence. It's the AI, we all want to talk about it when we're discussing technology. Ethics is wrapped up in that, and the way in which decisions are made, biases are sometimes programmed in. How are you tackling that? Have you been surprised by the limitations or the frustrations within AI at Microsoft?
I mean, it's a very, very important topic. In some sense, we come at it, I would say, in three parts. The first is, just like any other technology, I think we need to have a set of design principles that are used and practiced every day by our product makers and designers as we create new products that are AI-driven. And we have these 6 principles around fairness, robustness, privacy, security, inclusiveness, and transparency that we practice. They're not these abstract things, but every day we need to practice. And in practicing them, we also have to really, I would say, make the software engineering as it relates to AI more sophisticated. You brought up bias. For example, when you have a language model that's trying to make some decisions, that model usually learns from, in fact, human language that's out there in the wild. And we know that human language in the wild has biases. So we need to, in fact, have technology that can help these artificial intelligence models to get debiased. Data is important. We need the lineage of data needs to be really carefully thought through. So we are doing a lot of work in even building, I'll call it, the tools that allow the practice of AI more robust. And lastly, ethics. We have a multidisciplinary body inside the company that is available to every product team and every leader and every decision maker that we use, so that we are making sure that the technology that we build and its uses are being ethically governed by our enduring values.
Have you had to turn down companies' contracts because it hasn't always sat well with your ethics groups internally?
Absolutely. I mean, there are times, in fact, even prior to AI, we've always sort of had these, principles. We've now perhaps gone a couple of steps further in having more of a process around it, where we are very, very clear that if there is any project that we get involved in that doesn't sit well with our values, we don't do them. And that's sort of as simple as that.
My exclusive conversation with the Microsoft CEO, Satya Nadella there. Now coming up, trouble for Tencent continues. Asia's biggest stock has lost almost 20% in an unprecedented 10-day losing streak. Can it bounce back? We'll discuss next. And coming up later in the program, global hits crypto. This is Bloomberg. This is Bloomberg Technology. I'm Caroline Hyde in New York, in for Emily Chang. Now back to our top story. The Nasdaq, it was up modestly a day just after the tech-heavy index had its biggest percentage drop since June 2016. But of course, global tech felt the blow. Tencent's downward spiral is accelerating at a dizzying pace. Asia's biggest stock saw its second worst day in 7 years on Thursday. The Chinese internet giant has lost almost 20% in an unprecedented 10-day losing streak. Joining us now from Beijing, Ben Harburg. He's Managing Director of MSA Capital. Put this into perspective for us. Tencent, of course, has been a rocket ship since its IPO 7 years ago. How much does this significant sell-off over the last 10 days, over the last month or so, worry you?
It's really worrisome. Tencent certainly has a hand in just about everything going on in China, from chat to e-commerce mobility, you name it, AI. So for us, looking at where they are investing, the types of industries that are tied to the WeChat platform, and they're starting to see declining user numbers, losing that to other companies like Toutiao. I think it's an overall worrisome trend, at least in the short term here in China.
This is a company that's trying to reorganize, Ben. It has been perhaps focusing a little bit more for different areas of the business, trying to diversify, particularly as we see regulatory hurdles being thrown at them by China, and particularly when it targets gaming, which is a big cash cow for the company. Are they making the right maneuvers to be able to support their profitability going forward?
I think they are. So, a couple of the key restructuring items. The first was this new platform and content group. We kind of termed that the anti-Toutiao group. That's essentially them trying to unify their chat, short form video, media, news, things like that are being eaten away by this new entrant into the market. The cloud computing division, or the cloud kind of services division, is a clear attempt to really try to counterbalance the impressive moves that Alibaba has made in that space. Their cloud computing at Tencent doubled in revenues in Q2, so that seems to be going in the right direction. And then this new push into kind of industrial and enterprise, smart industries, is really the largest and newest push. And this is to kind of unify traditional industries with a lot of the AI, big data, core components that Tencent has always offered in its normal industries, kind of next generational industries, but now bringing them to traditional industries. I think that's a really critical component of this restructure.
So, Ben, do you think the restructure will inherently work? Does it make it more of a buying opportunity?
I'm bullish on Tencent, especially at these kind of prices. I mean, they've been trying to do very modest share buybacks, less than 0.2% of the total shares outstanding. They've got their lowest PE multiple, 25x or so, over the last almost 5-6 years now. It's really low today as an overall share price, but they've got a lot of gems still in their basket. They've got a lot of great investments in companies like Pinduoduo, Meituan, global groups in the ride-sharing, entertainment, and now even in financial services spaces. And now they're just starting to grow into other capacities. Their battle with Tencent rages on in the fintech space. They're bringing their platform to existing traditional industries like retail with their investments into Wanda Commercial. So I think that today's price is not representative of where this company can go.
But looking at today's prices, when I'm looking at the Bloomberg, it's trading at 27 times future earnings, 27 times current earnings. That is still more expensive than Facebook. That's still more expensive on a multiple basis than Alibaba. Why wouldn't you just go into Alibaba, indeed, if it seems like a cheaper stock?
Alibaba is still far less of a diversified platform today than Tencent. Still, Alibaba very much retail and then ancillary streams around that, so payments, logistics, and other services. Tencent have a hugely diversified portfolio that spans gaming, entertainment, transportation, the omni-channel and omnipresent network of WeChat, which is essentially the main port of call for China's 800 or so million internet users. And so, as a diversified platform, I think today it's still difficult to compare it on a strictly kind of PE ratio perspective against a Tencent, against a Facebook or an Alibaba. Particularly Facebook, I think, which is really dependent today still on advertisements, and has actually shown to be, I think, a lot less innovative than Tencent. Tencent has been great, really, about reinventing itself, not being afraid of cannibalizing its own business, and investing into sectors where it doesn't necessarily have existing synergies today, but where the platform can grow and expand and potentially rescue the business should certain elements of it, even things like gaming, start to reduce in terms of their overall contributions to revenue.
Ben, a lot of this erosion in value has been spurred on by concerns about the regulatory implications of China. How much is that tainting technology as a sector over in the country?
We've had a difficult period over the last months. Certainly, there's a high incidence of internet addiction. The Chinese government reports about 23 million internet addicts. We also have, had instances of, predatory peer-to-peer lending platforms. There's a lot of work that the Chinese government needs to do today to continue to regulate these rapidly advancing and rapidly changing industries that would be difficult for any government to keep up with from a regulatory perspective. So I think we'll continue to see a lot of involvement from the government in a lot of these new and emerging industries.
Yeah.
They've benefited historically from being under-regulated, and so I think it will be a trend that will continue.
Ben Harburg putting it all in perspective for us, MSA Capital Managing Partner. We thank you very much for joining us. Now, Tesla and the SEC have put aside an insulting tweet by Elon Musk. On Thursday, they asked a federal judge to accept a settlement of the fraud suit against the electric car maker and its controversial CEO. Musk later insulted the agency on Twitter. Tesla and Musk have agreed to pay $40 million to settle claims that he misled the public by tweeting about a plan to take the company private. Musk will also step down as chairman. Coming up next, crypto's rough year is taking its toll on one of the world's largest digital currency exchanges. Just what has happened to Coinbase? We discuss. And Facebook purging the social network is still trying to weed out political bad actors on its platform. Can they keep the election manipulators at bay? This is Bloomberg. Facebook says it's removing 559 pages and 251 accounts on Thursday that have consistently broken the platform's rules against spam and coordinated inauthentic behavior. Now, this comes right before the US midterm elections, of course. For more on the story, let's bring in Bloomberg Technology's Sarah Fryer, who covers the social network. So what exactly were these pages trying to do, Sarah?
So this is different than the kind of interference in our politics that we've heard Russia and Iran coordinating. This is actually people in the U.S., these domestic accounts, that have been trying to use incendiary, shocking political news to get people to click onto their sites and into the ads that they're trying to run. So it's really more of a financial operation to try to make sure that they can hook people the same way they do with, like, health news that's a little scary or celebrity news that's a little shocking. Now politics is so much in the same category of things people click on that it's become a target for spammers.
Do we have any idea whether these tactics are very different from those deployed by Russia or indeed Iran, as you talk about? Do they also do it for financial gain in some way?
Well, I think in the cases of Russia and Iran, they're trying to run a misinformation campaign. They were actually coordinating real-world events that people showed up to protest. They wanted to cause some chaos in the United States. This is different in that they're trying to cause just popular websites. I mean, this kind of political news, the clickbait, the stuff that people want to read, whether or not it's true, is stuff that can be quite lucrative to run on your website. And I should note that fake news is not against Facebook's rules. You can spread misinformation on Facebook, and it's totally fine. They're trying to tamp down on it a little bit, but it's not against their policy. What is against their policy is running accounts with inauthentic names, multiple people having the same count in the name. That sort of fakeness and that is what is at the heart of what Facebook wants to delete, and that is a similarity across what Russia did, Iran did, and what these domestic actors are doing. They're creating accounts of people to drum up buzz about political news, even though those people don't exist.
251 accounts is a lot. Do they take them all down at exactly the same time? Do they do this sporadically and announce it all in one go?
Well, you have to imagine that Facebook can see this traffic and see who's popular. And they probably knew for a while what was going on before they decided to take action on it. I think there's a little bit more pressure on them right now to try to do all that they can ahead of the midterm elections. That was something that they cited in their blog post. We're very close to the elections now, so this kind of content, even if it doesn't have an exact political agenda except to shock and surprise people and get them to click, that can still be very damaging to the collective knowledge of the electorate ahead of an important election. And so they're trying to, really be sensitive to that now, even if in the past it might have seemed sort of harmless.
Midterms are a key thing for them, I'm sure. Bloomberg Technology's Sarah Fryer, we thank you for that story. In the meantime, shares of Square continued their plunge Thursday, sliding as much as 16% after word that CFO, also called Sarah Fryer, is leaving to become CEO of neighborhood social network Nextdoor. Our analyst said that Fryer's leadership was more instrumental to Square's growth than that of CEO Jack Dorsey. She helped lead Square through its IPO back in 2015. Now, let's shift gears to cryptocurrencies now. We're no safe haven, of course, at the moment, amid the global equity sell-off. Bitcoin continued its rough year, falling as much as 7% on Thursday. Meanwhile, rival coins, or just other coins, Ether, XRP, which is of course linked to Ripple, and Litecoin, saw drops as much as 11 to 13%. All of this on the same day, let's get this, economist Nouriel Roubini told the Senate Banking Committee, "I told you so."
Crypto is the mother or father of all scams and bubbles, a bubble that's finally gone bust this year. Second, blockchain is the most overhyped technology ever and is no better than a glorified database.
Damning words, and the bad news for the digital currency world continues. This time, it's one of the world's largest crypto exchanges feeling the pain. Coinbase took a big hit with an 80% drop in its buy-sell user volume between last December to this September. It's all according to the VC firm Tribe Capital. That echoes findings from research firm Dyer Limited, who found that Coinbase's US dollar volumes had also fallen 80%. Dire indeed. That's over a period of the fourth quarter of last year to this year's third quarter. Here to help us digest all of this, co-host of Bloomberg's What You Miss, Joe Weisenthal, and Lily Katz, who covers digital currencies for Bloomberg. I'm going to ask Lily you first with this Senate hearing. I mean, flamboyant stuff from Nouriel Roubini as ever, but what does it mean? Why is the Senate hearing from him and indeed other people on the other side of the trade?
Yeah, this hearing kind of reminded me of that hearing with Mark Zuckerberg when he was testifying when all the Cambridge Analytica stuff was happening. And I say that because what I learned from it was that a lot of the senators that were asking questions still have these very basic questions around cryptocurrencies, and we've seen this before in past hearings, but it's becoming more and more clear that our government doesn't maybe fully understand cryptocurrencies and what blockchain technology actually is. And there was one point in the hearing where, so it was Nouriel Roubini versus a gentleman from the Coin Center, which is a crypto lobbying firm in DC.
Peter Van Valkenburg.
Yes, and he started to get a little bit technical, and I think one of the senators kind of redirected the question, sort of pushing him to give it a more simple answer, and it was clear that he didn't quite understand it.
Sometimes it's the way to try and get to the bottom of whether someone really understands something is make it more basic. What do you make of Nouriel Roubini grandstanding here, Joe?
I've been really entertained by Nouriel Roubini's tirades, both in the hearing, but also on Twitter the last few days. He is really going to town. And the funny thing is, if you read his tweets in a certain light, he actually kind of sounds like a really hardcore Bitcoin maximalist, because he slams altcoins and he uses a pejorative to describe them that we can't say on air, but that Bitcoin people like to say. And he slams Ethereum, and he slams Vitalik for being a dictator of Ethereum, and he slammed blockchain technology. And so it's almost like he says all the things that the really hardcore Bitcoin tribe likes to say, except he doesn't say anything good about Bitcoin. But I've just been really amused at how much actual overlap there is between him and the most hardcore faction of the crypto world.
And talking about overlap or lack thereof, what about the actual asset class as it stands right now? Because interestingly, you would have thought it might be an uncorrelated asset, and it's not when it comes to equities. Yeah,
cryptocurrency is getting absolutely clobbered again today. It's hard to always, crypto falls, they fall plunge 10% frequently, so who knows? But the way I think about correlation is in a panic, what do? You worry about your bills coming up at the end of the month, and you raise money in the currency that your bills are denominated in. So if you're in the US, you're like, I need some dollars. No one has bills denominated in cryptocurrencies that I've ever heard of, maybe some miners or something
I just got pitched by a company that's saying that it's got loads of future rentals
there you go.
on in crypto at the moment. Do we
But
want
by
to
and large, crypto is a very good thing to sell if you need dollars. And so when you get volatility, you sell everything but besides the currency you need.
Talking about buying and selling, well, you would have thought that'd be music to something like the exchanges, Coinbase's ears. But it seems as though, Lily, Coinbase at the moment, one of the biggest exchanges, if not the biggest, has actually seen a real plunge in users.
Yeah, they've seen an 80% plunge in active users. I mean, it's not that surprising if you think about it, because prices in cryptocurrencies have dropped substantially. But if you're trying to run a business, it's not exactly great. So I think, one thing that they are probably going to have to do is figure out how to sort of diversify their business.
But that's trying to, right?
Well, that's also interesting. It's because they kind of have been trying to do that, right? They've been they've introduced all these new products over the last year, and they've been doing this big institutional push. And there was a story out today saying that they're shutting down their index fund product because they weren't getting enough institutional interest. And we also just learned, I think this week, that Adam White, who was a key executive, he was their fifth employee at the company, and he was very important in their institutional push. He is leaving.
What do you think that says, Joe? Because we've spoken to big players. There are some big players, like the former Fortress fund manager who's now gone hook, line, and sinker into the crypto space. But are institutions really getting into it at the pace we expected?
I don't know. It's really hard to say because there have been a number of announcements this year that I think if we had got these in 2017, people were like, oh, this is incredible. Like, for example, the Yale endowment allocating a little bit of money to a crypto hedge fund. It's a tiny amount. It's not the type that moves the needle. But I feel like these stories would have got people so excited last year. But on the other hand, perhaps so much of the hype last year was about front-running what we've seen this year. So maybe it's all, as they say, like priced in or old news. Like, this is what was expected. So the fact that some of this is actually happening, that's not new. There needs to be some new catalyst beyond just the fact that these institutions continue to take marginal steps into the space.
Do we know who's really hurting right now? Because what interests me, and Joe and I were talking about it once, is that those that have really hurt by the recent sink-off, particularly in Ethereum and Ether, are those that raised money in ICOs that have been sitting on this money and didn't turn it back into fiat money. Do we know who's...
The hodlers, the people who've been holding the cryptocurrency, and a lot of the...
Who are they? Do we know? Of course,
well,
the whole idea is
there
you're
are
not meant to
lots
know,
of different types of people, but one, I would say, is the crypto hedge funds. There have been like hundreds of these crypto hedge funds that have emerged over the last year, and they sort of went into this new asset class full force, and they're seeing returns plummet.
Fascinating. We'll have to keep a track on them and see what their viewpoint is. Maybe they're thinking it's time to buy. Of course, we thank you, Joe Weisenthal. I'll be hanging out with you in a little bit. And Lily Katz, we thank you for your expertise. Now, when we come back, a rocket launch failure forces the US Russian space station crew to have an emergency landing. What does it mean for the future of International Space Station? We'll talk to former NASA Administrator Charles Bolden. This is Bloomberg. This is Bloomberg Technology. I'm Caroline Hyde in New York. Now, the Soyuz MS-10 spacecraft launched from Kazakhstan to the International Space Station, carrying out an astronaut, Nick Hague, and Russian cosmonaut, Alexei Ovchinin. During the launch, there was an anomaly with the booster, and the launch ascent was aborted. What happened next was a ballistic emergency landing of the spacecraft. Joining us on the phone from Switzerland to discuss is a former NASA administrator and retired astronaut, Charles Bolden, to talk us through just how rare this is an occurrence, and certainly for everyone to survive it.
Caroline, it's a very rare occurrence. We've only had, to my knowledge, one other abort of Soyuz spacecraft, and that was quite a while ago when one of the cosmonauts with whom I trained, Vladimir Titov, was actually ejected from the launch pad after a fire on the launch pad. But the Soyuz and its launch vehicles have been very reliable spacecraft up until now.
Does it set back the voyages into space? Will it make them give food for thought? How does it affect the space station, do you think?
That's the question. You know, we asked, I think when I was talking with someone earlier, I said, where do we go next? It is a setback because today, because of restrictions on NASA's ability to work with the Chinese, NASA is relegated to one capability to get their astronauts to the International Space Station, and that's on the Soyuz, the Russian spacecraft. A year from now, if all goes well, we'll be back to normal, and we'll be able to utilize either the Boeing Starliner or the SpaceX Crew Dragon to launch crews from the Space Coast, from the Cape Canaveral Kennedy Space Center area. But that's like an eternity away right now because of the failure today.
And this, of course, is all tied up with the recent resurgence and focus from the US government into space, the space race. How do you think this has been taken by people such as yourselves who've dedicated their lives towards studying space and as an astronaut?
Let me try to correct one thing. I will take issue on you with you on one thing. There is no resurgence in the interest in space, particularly human spaceflight. What we're doing right now is a continuation of what has been going on for a number of administrations. And you know, the decision to move away from shuttle and to rely on Soyuz as an interim measure until the United States had its own capability again was one that I agreed with and was very important. But the problem arose when we found out how difficult it is to get things and people ready to go to space. So, you know, we're in a position that we were hoping we would not be in, but we'll get out of this because we've thought about it very, very long and hard.
Charles, how much do you think government funding and focus is necessary at the moment when we seem to have so many private sector billionaires, for want of a better expression, really focusing on this area as well, even though theirs might be in general to raise money or indeed for space travel rather than investigation?
Well, given the dreams of all the what I call commercial ideologues, there is one customer today for human spaceflight, and that's the U.S. government. That's NASA and our international partners. There will hopefully become a time when we'll be able to have a viable commercial capability for putting humans into space. Yeah. But realistically speaking, that day is not now.
We thank you for your expertise and indeed your past experience. NASA Administrator and astronaut Charles Bolden, we thank you for joining. Now that does it for this edition of Bloomberg Technology. I'm Caroline Hyde, and this is Bloomberg.